This is the Fed funds rate, which, as you can see, went up a lot very quickly in 2022. Went sideways for a while, came down a bit last year, 2024, and then up until recently went sideways this year before the most recent 25 basis point rate cut, which at the moment the market's expecting one to two more 25 basis point rate cuts this year. And they're justifying this by saying the labor market is weakening on the margin, which back to one of the graphics in the first section. But at the same time, we want to reiterate that inflation has not come back down. So this is a pretty unique, as you can see here, inflation expectations. So it's a pretty unique scenario in that interest rates are coming down, but inflation isn't, right? And there's a lot of analysis out there right now that says going forward with companies involved in AI building out these big data centers, it is going to potentially increase electricity costs, et cetera, which could also put another upward driver to inflation, further complicating the interest rate environment.
Yeah, we talked about this at the Advisor Partners event last week, that one of the byproducts is we'll see inflation in spots that we haven't seen it yet, major inflation. And we mentioned electricity, and someone said, you mean more? Because anybody that pays a power bill knows that it has went up recently, but the amount of energy required by the data centers and the AI chips is substantially more than what's already been recognized and realized by energy costs.